Hi everyone, and welcome to your Daily 5. This is Mish Schneider, Chief Strategist of MarketGauge.com, here as guest of StockCharts.com. So I always pick a theme, however there's so much going on in the markets that rather than stick to a theme, which you could easily read about, what I thought I would do today is really just basically give you kind of a random list of some of our favorite picks. Some we have skin in the game, some are more quant model based, others are more discretionary. But this way, depending on what happens, obviously, as we're going through September and some consolidation above major support in the indices, not to mention a Fed meeting, inflation picking up, and all of that, at least you have a focus list to look at. So take out a pen and paper because I'm going to give you some levels. Here's a list of stocks we're going to cover: Garmin, Teva, GDX, that's an ETF, Tesla, Coinbase, MSOS, another ETF, and Nvidia. Yes, as you can see, a broad spectrum of things. All right, let's get started. So we're going to start here with Garmin. I know it's kind of a strange pick because this is a stock that was at one point, as I'm scrunching up to show you, trading all the way at close to $180 a share, now at 107. Of course, the low, which was accomplished in October of 2022, was down at 76.50. Kind of a classic reversal, but what prevented us from buying is that we didn't get the second day confirmation, so we kind of left it alone, and we really haven't looked at this stock except for the fact that over the last few months, it's really been this major consolidation pattern. If you go back here and look from basically May 2023 to now, we're in this range, and we can use the 200-day moving average as sort of the low of that range. And what's interesting is even though we've cleared the 50-day moving average, two new indicators that you see on the charts, which will be available as plugins very soon, are a 6-month calendar range high and low that resets in January and in July. And I like this particular indicator for this stock especially because we keep rallying to it and failing, which makes the areas to clear very, very obvious. But before we even get to those areas, let's take a look at a couple of our other indicators that you do have. One is the leadership plugin, which right now not only has shown it outperforming the SPY since basically the beginning of September, but now taking out this key line right here and continuing in its momentum. Now, if we look at the high, the last time it was up here in terms of leadership, it can go a little bit higher from here, but I think it can get much higher, of course. Two things happen. Number one is we are seeing a bit of a bearish divergence in our momentum or real motion indicator, in that we're just now starting to clear the 50-day moving average, which is very close to the 200, where here we've cleared that 50-day moving average, and look at the spread between the 50 and the 200. So momentum is telling us that this probably won't get really interesting, and if we had to pick a point, it would be until it actually can close and get some traction above the 6-month calendar range high, which right now stands at, well, right now it does stand at 108.17. So let's consider that to be the area that we need to see clear. Then you have a choice of risk depending on the type of trader you are. If you really want to sit and hold this, considering that this was at one point $180 stock. And there's some news on Garmin, by the way. We won't get into the fundamentals. You can always look it up. But nonetheless, the fundamentals are supporting why this has been consolidating sideways. You can risk to either under the 50 at 105, you can risk to under the 6-month calendar range low at 102.60, or you can say, you know what, I'm in it unless it breaks down under 100, and I'm just going to sit and hold this one. But I'd be definitely keeping my eye more on the momentum at this particular time. The next one is something that we do have skin in the game. I have, by the way, talked about Garmin on the media, but I've also talked about this one a lot. Even did a whole video with Business First AM on this, and this is Teva Pharmaceutical Industries. Now, this had tremendous amount of issues with lawsuits ranging from opioid usage to, it was just all big whopping legal mess for this company. But they resolved all of that, and they have to pay, and that's it. All issues are resolved in terms of they can't come back and sue anymore. And they're paying out, I think it's something like $5.5 million a year over the course of several years for these fines. So it actually rallied after that, and I may have even featured this with you at some point before. There's a few things that I like about this. If you go back a little bit in time, just to kind of see where this has been, if you go all the way back to 2018, this was about a $25 stock, so it's not like we're looking for this to make, say, an Nvidia type move, which we will talk about. But nonetheless, we definitely think this has some room. Now, what's also interesting about this is it's following up after a period of consolidation over the 200-day moving average. We just got the golden cross, which wasn't too far from current levels, but nonetheless, it was a little bit far, not the cleanest. But it was definitely great when it gapped over that 200-day moving average. Now we are following up along with the 10-day moving average. Here is your 6-month calendar range high. So once this broke out over the 6-month calendar range high and then confirmed over that 200, you can also see that exactly when it started to outperform the SPY. And if you look at the real motion, this was also starting to clear the Bollinger Bands and the 200-day moving average. By the way, the golden cross here almost perfectly corresponded with the golden cross in price. Now, even though we're moving up in price, and today we made a new high based on really not exactly 2023, but certainly close to it, but certainly over the last several months, we need to get this momentum over the Bollinger Band. So where would that be? If you look at a weekly chart on Teva, which I don't have all the exponential moving averages, so I'm just going to talk to you about it. But if you look at the weekly chart on Teva, we have really cleared through everything. But what's even more interesting is the 80-month moving average overhead and the 23-month moving average, which this cleared when it got through 880, and now it's clearing a Bollinger Band on the monthly chart at around 1050. So to me, I'm looking at a first target area up at around, let's call it 1250. Why don't we start getting into resistance at the overhead 80 monthly at 1355? If we look at 1250, what does that look like from here? When was the last time we were up at these levels? And you can see the last one time was up at 2021. So that's my recommendation here in terms of risk. Again, depending on the type of trader you are, if you're looking for another couple of dollars up, obviously you don't want to risk much more than to under, I would say, probably about this low right here, under 970. Next stop is not a stock, but actually a GDX, which is an ETF. The reason why I'm featuring GDX is because this has really been, I think, one of the hardest instruments to trade, because when gold was rallying, this wasn't following. When the stock market was rallying, this wasn't following. It was just kind of in its own world. And now, all of a sudden, the relationship has flipped back to this started leading the gold on its next leg up. So GDX has got a couple of things I think going for it right here. Number one is obviously you can see we're clearing not only the 50-day moving average. We had 2 days of confirmed phase change, then it went back into a bearish phase, and now back into a recuperation phase. I love recuperation phases, and once it really takes out 30 and closes above 30, I think it's a pretty good risk down to, guess what? Your 6-month calendar range low, which it failed but came back through. Then, of course, your next hurdle is going to be the 200-day moving average, and then finally would be your 6-month calendar range high. We get through there, then you know gold is going to about $2,500 an ounce. Typically, in inflationary environments, the miners will lead the precious metals. It is outperforming the SPY. That's a good thing. And then on the momentum, we're a little bit behind, but we're getting up to that 50-day moving average. If we get through that 50-day moving average, then not only would we be clearing the 50-day moving average, but then we would have our sights on getting back through the zero line, which it really hasn't been above since back here in July after it had tested. So at this point now, I'd say this is another really good instrument to keep your eye on. We're going to go to something a little bit bigger, and that's Tesla. So now Tesla, there's been a lot of bullish talk about Tesla. Tesla, obviously, because of the strike with UAW, is not involved. People thought that was going to be a big boon to the stock. They have cut their car prices all along. But it's more than just a car company, as we know. It's also a huge software company. They're also really big involved with the infrastructure that has to happen for charging stations, et cetera, et cetera. So let's just look at the charts here. What's so amazing to me is here's your 6-month calendar range low and your 6-month calendar range high. We got through it and then failed it the next day. So that was a fake out breakout. And then once we cleared below the 6-month calendar range low and then the 50-day moving average, we had a pretty good sell-off. Here, and I've seen this before with this stock, it actually had an exhaustion gap bottom low. I love that. When it gaps down, of course, when it's a new low, it's even more powerful. But even in this case, gap down low, gap up, that gave you a first indication of this was definitely no longer going down. Then as it got through 225 and then the 10 and then had some resistance at the 50, finally gapped up above the 50. So we're going through another period of consolidation, and guess what? Back above the 6-month calendar range low. So that tells me that if you really wanted to play this tight, you could probably look at 255 as your ultimate risk. And if you wanted to wait for some confirmation that it was really going to get above the 6-month calendar range low, we could probably look at around 280. That would clear all this congestion. It would also clear the high of the first day when it gapped lower at around 280 or 281. And then, of course, we would be back looking at 292. There is no reason why Tesla, if we go back in time, can at least hit back to where it was in October of 2021, up around $400 a share. Okay, the next one here is Coinbase. Now, I know this is a frustrating stock to trade. It's not a stock, actually, ETF. But essentially, what this is right now, to me, is an opportunity in the making if you are extremely patient and you understand risk. Couple of things. It's just going sideways. Cannot get through the 50. I love when you have that clear of a signal that it has to clear a major moving average in order to change a phase. We're in a caution phase because the 50 is above the 200. We have 2 closes over the 50. That kind of makes it simple. But in the meantime, I love the fact that it's holding above the 6-month calendar range low. Here is your 200-day moving average. And we did go through a little period of outperformance against the SPY. Then it kind of went back under it here when it broke down under the 10. And it's struggling a little bit to get back over that leadership quality here against the benchmark, which tells me that probably if we can get a close back over that 10 or somewhere over 81, we'll see that blip up. Now, in terms of the momentum, there's no real major divergence here. We have slipped off in the momentum. We're gaining in momentum a little teeny bit after the last couple of days. We've sort of stabilized. But what's interesting to me is the momentum here, and the momentum, if we go back to the last time we were around these lows right here, we have a higher momentum, but it's not great. So that would be my only caveat, which means why I would wait for probably a close over 81, probably why I would use somewhere a risk under the 6-month calendar range, or if you just wanted to go clear to under 70, and buy with a starter position, possibly adding or getting into the position for the first time if it gets 2 closes over that 50-day moving average. Next we have MSOS. This is also an ETF. And this, of course, is very news-based. It was dormant for so long after trading up to $56, believe it or not, in 2021. And now, after sitting through really basically this huge crash over no news more than anything else, it seemed pretty obvious to us that this wasn't a matter of if they come up with some kind of legislation in the Senate, but when. And so clearly that started to come out when they lowered the scheduling of the type of drug from a Schedule 1 to a Schedule 3, obviously not like heroin. And now there's talk about the Senate meeting, and of course that's already been, and that's why you got this big move up. However, since it has traded at 56 and now we have some real legs on it, It's first of all well above its 6-month calendar range high, so 650 is kind of like your rock bottom to me at this point. Number two is even though we had a nice reversal pattern up here from the highs, we've had a 20% correction, which sounds about right for something like this. So you can even go much tighter and say it's got to hold 8 or it's got to hold 750 if you wanted to go a bit lower. It's well outperforming the SPY. Did have obviously a little bit here where it turned down under the Bollinger Band and had a little bit of a mean reversion here, which of course after that reversal makes sense, but the momentum is still pretty darn good. So essentially at this point, when you're below a 10-day moving average and you're having an inside day, you can wait for us to clear that moving average or even the high of that day if you wanted to have more confirmation. So anywhere between 860 and 880. And then again, pick your spot. Do you want to sit with this and just say, okay, I'm not going to necessarily get out unless this really breaks down under 650? Or do you want to say under 750 or under 8? That's a personal decision, but nonetheless, this is definitely a hot one. And at some point, especially as we get closer to the election, I think we'll see that interbanking legalization, which means you may have to see some volatility. So keep that in mind when you're getting involved. And finally, let's talk about Nvidia. This is in our quant model, and we're still in the quant model. And so again, lots of negative stuff came out about Nvidia after the earnings and that big pop here. That was the zenith of this particular stock, which was not surprising. I mean, $500 seemed like a fair value to me for this stock. But nonetheless, it's really a question of what does it do from here. And I wanted to show you, besides Tesla, something else we had in our quants. And these are partial positions at this point. But there's a couple of things to really keep an eye on. Number one is here's your 6-month calendar range low. So 413. I mean, you could even take the low that day down to 403, but figure between 403 and 413, that's your major support. If you wanted to go a little bit nearer term, what I love here is that after the sell-off, you got a big bar, an inside day of that bar, and now an inside day of the bar from yesterday. So that's 2 inside days. So people are waiting. They don't know what to do. That makes a lot of sense. So that means they're going to look for some reconciliation. To me, the reconciliation could be over 440. You get back in. And then we'd have hurdles, obviously. We'd have to look at the 10-day moving average, and of course the bigger one over at the 50-day moving average. But nonetheless, to me, Nvidia is not a stock that's going to die. You have also, obviously, it been outperforming the SPY, and now you can see it's underperforming, but it's holding the Bollinger Band. And what's very, very interesting to me right here is the bearish divergence. This started to happen, by the way, as this was making new highs. Notice how the momentum never cleared that 50-day moving average. So we kind of knew. We actually had a profit target around 502, and we got out of most of it. But you can see the momentum really has done nothing but decline. So now we need to see momentum pick up on top of the price. So at this point, we're holding along the Bollinger Band, and we're still weakening in the momentum. So we want to see this momentum start to pull up a little bit in the real motion. Maybe get back through this level here at 43.55. Obviously, you can see it had resistance when it was at the 50 here. It had resistance at the 200, so this is still in that bearish divergence. But clear the 200, and then we can go from there. But I would not discount Nvidia. This is a huge sideways action, even though it's a $100 range. When you're getting to a stock that trades at $400 to $500, these type of corrections are to be expected. Okay, that's it for now. Thanks so much for watching. You all have a great day. Happy FOMC, and I'll talk to you again real soon. Bye for now.